S&P 4000, it's a record. But at this high level, don't you think a possible sell-off is going to come? My response to that is no. I don't think a sell-off is going to come. Now, I don't think there's any reason for a sell-off to come. I think a lot of money has been pumped into the system, and this provides a floor. There's no reason, no fundamental reason for stocks to sell off. Jobless claims still aren't looking so great, but they're no longer in the million range. And the economy does look relatively strong to me. Consumer confidence is very strong. There's some pretty good spending out there, still record high savings rates, and the reopening is about to occur. And as the reopening occurs, I think areas of the market that have lagged and areas of the economy that have lagged, things like energy and stuff, hospitality, etc., will rebound very strongly. And we are seeing pretty strong hospitality numbers out of hotels and out of airlines. So it looks like people are traveling, people are spending money, and they're ready to continue doing that as restaurants hit maximum occupancy, and that theme broadens out across the economy and spending resumes. That said, I acknowledge the fact that we are at high levels. So, while it is possible we do see some sort of rip here, I am tapering my expectations there a little bit. I think the rip and the rally has gradually decreased in slope as we've gotten to this level and may kind of just turn around here, stay flat until we get something with this infrastructure package. Now, I think it's far from passing. I think there will be pretty strong opposition to it. I even think some moderate Democrats aren't just going to instantly vote for it. I think they're going to try and shuffle some things around to get more infrastructure spending in there, because there's not a whole lot of infrastructure spending in terms of, American infrastructure. It's like new cars for the federal government, which in my opinion doesn't seem so necessary. So a very small allocation of bridges, tunnels, etc. So we'll see what happens. A lot of these things are needed, particularly dams, actually. We don't want to have Suez Canal situation here, but we actually do have a Suez Canal situation regularly on some of these dams that are like 100 years old. So I expect if those get worked on, it'll be good for the economy. A lot of these companies will be providing those products, and they'll hire a lot of people to do them. And at the end of the day, they will expand the capacity of ships to go up things like the Mississippi River, and that will increase and speed up trade domestically and internationally. I think that's a good thing. That is a long-term bullish thesis, infrastructure. I think the pieces are set for a continued market rally. I don't think a sudden market sell-off is the more likely outcome. I just don't see any sort of negative catalyst that can happen that could cause that, and there's just nothing on the horizon. And I saw the coronavirus downturn coming, recorded a video on the Monday before it happened called 20% chance of a recession, and that was the catalyst. That was something the market was not considering at all-time highs. And let's discuss another, and there's nothing like that right here. Let's discuss another thing. When the market hits all-time highs, that is not an indication that the market is going to spill. When the market hits all-time highs, the most likely outcome is another all-time high. So, given we are at an all-time high, just came from a relatively recent all-time high, I expect to get to another all-time high. And I expect different areas of the market to be leading here. Yes, I do think tech has sold off significantly, and the right tech will continue to perform well. So if you're going to own tech, make sure you're happy holding it for a number of years. It's not some random SPAC that you just heard someone talk about. Really make sure it's a thesis, and it can be a SPAC, but make sure it's a thesis you like into the long run and you're willing to hold and experience pain with, because it's your baby. You have babies in tech. Grow these children up. But energy and cyclicals and hospitality type companies, retail, the depressed areas of the market that are still well below pre-pandemic levels should do well. This is the area of the market that I believe is going to push us forward and bring the market up and be responsible for the next leg of gains, and these will be the leaders, in my opinion. We will see what happens, whether it's them or tech by 1 or 2% as a leader. I don't know, but I expect these areas of the market, the more cyclical reopening names, to do well. And I'd be discretionary in these names. I'd find good names that are well priced, ideally with a dividend, not necessary, but ideally with a dividend, and expect to get a good return from those. So be on the lookout, take a dabble in those areas. Don't be afraid to buy, but don't wait too long either. So that's the deal. That's how we're looking at things. And until next time, peace out.